And then we're over here in the other section where it doesn't fit. These ones, they're not cool enough to fit in any kind of clique, right? They're kind of loners. They're out doing their own thing or whatever, but they're still important. And that's why they're in here where you normally go to enter the day-to-day type transactions. This time we're going to go down to the pay down credit card form. This form being similar to the transfer form. If you recall the transfer form, that's the form we're going to use if we're transferring money between two checking accounts, typically like a checking account and a savings account, for example. You can think about these forms being used more broadly with type of accounts that are connected to a financial institution, and therefore bank feeds can be connected to them. And we can extend that then to the credit cards, because credit cards, although when we think of bank feeds, we don't think normally of credit cards, they are still connectable as bank fee type transactions because they're handled by a financial institution. Therefore, we can pull in the credit card transactions in a similar fashion as we can with the bank transactions. And in some ways, the credit card transactions are often actually a little bit easier because we usually are just paying for things with the credit card. So we usually just have expenses with the credit cards, whereas with the bank transactions, we have to worry about the deposits and the decreases, and we typically have different kinds of transactions that might be going through the bank accounts, as it also weaves through more often other areas of the financial process, including not just purchases, not just expenses, but also obviously on the revenue side, on the payroll side, and so on and so forth. Okay, so what's the purpose of the transfer? So just a quick recap on the transfer form, so that will lead us into the pay down credit card item. Notice that these are over here in the other section because they're not really part of any normal cycle. In other words, I don't transfer money from one bank account to another bank account or pay off the credit card as basically part of my normal, cycle. Although hopefully I do pay down the credit card possibly monthly. Ideally, I'd like to use the credit card for a month, get possibly free loan of money without being charged interest, and then pay it off before they charge me any interest on it. Ideally would be the situation, which means you might say, well, I have a routine of paying it monthly. But the idea here is that it's not really part of the customer cycle, the vendor cycle, the payroll cycle. We're not really doing anything with it that has to be on a cyclical basis, and we're not using it to basically communicate with people we have to deal with, customers, vendors, and employees, and therefore it's still important, but it's here in the other area. Now with the transfer form, if we took money, if we go to the balance sheet over here, from the checking account and transferred it into the savings account, we noted that we could use, you would think, the first form might come to mind, an expense form. Why? Because that's the form that's like a check form, decreasing the checking account. That would make sense, but we saw that what happens is, although it looks correct on the checking side, it looks funny on the savings account side, because now you have an expense form that is going to be increasing this account, which is basically a type of checking account, right? It's a savings account. That looks funny. The journal entry would be correct. The transaction detail would look funny. Or you can imagine taking money from the savings account and putting it into the checking account, which from the perspective of the checking account, you would say, why wouldn't I use a deposit form? You could. The journal entry would be correct. It would look correct on the checking account, but again, on the savings account side, you would have a deposit form type form that would be decreasing an account that's a cash type account, which looks funny just in terms of the form type. Therefore, we use a transfer form, which could have an increase or decrease, remembering that the transfer form has its own problems, because when I sort the data by increases or decreases, for example, which we're likely to want to do, we want to sort by transaction type. If I have a transfer form, then it could either be an increase or a decrease. It's ambiguous. So it's going to mess me up if I want to sort by just form type to look at all the increases and all the decreases. But it doesn't run into the problem. It would be even worse if I had like a deposit form that was a decrease. That's going to mess me up as well. So we talked about the strategy you might use is to say, hey, look, I'm just going to use the forms that are according to the checking account because that's my most complex account that has most stuff in it. And I'm okay if the savings account has funny looking forms in it because it doesn't have as many transactions. It's easy to see what's going on in the savings account. Or I can use, the transfer form, which has that ambiguous form that could be increases and decreases. Okay, well, let's think about the credit card now. With a credit card, note that the credit card basically acts like a checking account in that when you make payments on the credit card, it's still connected to the financial institution. We can still use bank feeds with it. And as we use maybe an expense form with the credit card, and note when we do that, just to check that out, if I go in over here and I was to say an expense form, which is kind of a type of check form, a form that we think of as decreasing the checking account, we could also use that same form for the credit card. So what would happen if I use an expense form for the credit card? Well, that just means we're purchasing something on credit, which is going to be, it's going to be instead of decreasing the checking account, it's going to be increasing the liability account of the credit card payable. Now, note that you could enter the transactions with a credit card as they happen and then reconcile what you're doing to the bank. But because the credit card is all electronic transfers and typically money going out, then we usually can depend on the bank feeds. So the bank feeds work beautifully with credit cards typically. So most of the time we're not going to enter the expense when we charge it. We're going to let it clear the bank, and then we'll pay it off. We'll enter it as it clears the bank with the bank feed. So do you want to leave without saving? I'm going to say yes. So in other words, if I go into the bank transactions over here, then we can see we have the checking account is the default. We have the MasterCard. So typically the payments would come through the MasterCard here, and we would enter them into the system. As we enter them into the system, it will create typically possibly an expense type of form, which we typically think of decreasing the checking account, but here it's going to be increasing the liability. So if I go into, for example, the detail of, I'm on the income statement, that's the wrong spot, balance sheet, and into the MasterCard over here, we could see the expense forms here are increasing the liability. So if I go into that, we can see this was who we paid, went into a job. This is typically going to be an expense category. Instead of the cash going down, the expense is going up. So that's what we normally expect to be seen in here, expense forms that will actually be increasing the liability if we're using our credit card in this capacity. Now, at some point, what's going to happen is we're going to pay off the credit card, hopefully. And so how is that going to look? Well, it's going to decrease the checking account. So if I go back, we know it's going to go out of the checking account, and then it's going to also decrease the liability account down here. I would typically think of that from the perspective of the checking account. And what's the form I would normally use when I pay somebody off out of the checking account? It's a check type form, usually an expense form, because I'm going to pay it electronically. So I'm going to pay it electronically, decrease in the checking account. Normally that would be an expense form. That would look correct on the checking account side because the expense form decreases the checking account. But when I go down here on the credit card, it's going to look funny because now if I want to sort by expense forms, those are the charges that I'm using. And now I'm going to have an expense form in there that also is the paying down of the credit card. So if I use the expense form, I won't be able to search the credit card detail by form type to look up the payments of the credit cards because the expense forms they'll all be expense forms, whether they're increasing or decreasing the account. So what can I do instead? Well, you can think I could use a transfer form because that would be the same thing. But QuickBooks made another form specific for the credit cards, which is going to be the credit card payment form that will pay down specifically the credit card. This is a bill payment, but we'll make one. I'll make one soon. So let's go back. Now, just a quick note, if I go back to the first tab, normally both of these are going to be bank feeds. So if you have bank feeds turned on, what's normally going to happen is you're going to go into the checking account, and then you're going to see that there's a payment for the credit card. It's going to be a spend item. When you go into it, it's going to be a payment for the credit card. And if you just record it as a normal category, it's going to record it as an expense. So hopefully, if the system sees it on both sides here and on the credit card side, it will record it as a credit card payment, which is kind of a type of transfer, but it will have a credit card payment form, which will give us more detail. So we want to be careful of that. And then when I go into this side, I will see the payment over here, and hopefully it will match to the credit card. We'll talk more about the bank fee transactions specifically in a future course or section, but I just want to point out that's how it's typically going to happen in practice. So when you see the money going out of your checking account for the payment of the credit card, you just want to make sure that you're recording it with the proper form that is according to whatever system that you have in mind.